All right, looks like we're good. All right, traders, welcome, welcome. It's always going to be delayed. Here we go. Welcome, traders, welcome. Thank you so very much, traders, for your thank you for your patience. Um, Sometimes that's just the way technology goes. I just want to make sure that you're okay. Now, because of our issues, we had to launch this stream from a different link. So I'm going to have to give you all a few minutes to sort of find this link and come in with me. I apologize once again for the issues, but every now and then these things happen. Thank you so very much for staying with me. I promise you, your wait is going to be well worth it. This I promise, traders. Come on in, come on in. Let me know where you're coming in from, traders. Let me know where you're coming in from. I hope all is well. Welcome to another live masterclass. We have a very powerful topic to talk to you about today. It's a topic that I think is extraordinarily important in today's time right now. But thank you very much for waiting, guys. Thank you. Thank you. All right, come to Papi. That's right. All right. I'm going to wait a few moments, guys, to allow as many of you to pile in as possible. In the meantime, why don't you tell me where you're coming from? Where are you piping in from, traders? Where are you coming from? Talk to me. All right, Ohio. I see Ohio's in the house here. India is in the house. Fantastic. Love it. India in the house. Okay, we've got Mexico City. Oh, no, 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 no. Okay. India, Egypt, Mexico City, Toronto. Fantastic. I love it. International audience here. Brazil's in the house. Croatia. Wow. Nigeria. The Emirates. Toronto. Romania. London. Cali, Florida. Dubai. Russia. Wow. Welcome all. Mexico. Florida. Fantastic, guys. Fantastic. Thank you so very much. Traders, listen, thank you so very much for dealing with the technical issues. I haven't had these issues I haven't had issues like this in a very, very long time during my lives. But look, we live in a technologically driven world today, and we know that things aren't perfect, but we deal with them. And I'm so glad, I'm so happy and glad that you stayed with me here. So today, guys, we are going to talk about a very powerful topic. It is a topic that deals with not only wealth, which I believe should be the goal of virtually every single person on earth, but we're going to talk about certain tactics and techniques in the market that I believe can help you derive generational wealth. And what I mean by generational wealth is not just the wealth for yourself and for your current generation, but for generations to come. And so, what I'm going to do is talk about an overall approach to the market that I I believe if you use, you will equip yourself with the ability to utilize financial markets throughout the world to gain this generational wealth. Now, I will tell you that the same principles that I'm going to explain to you today have has those same principles have had an enormous impact on my life. They've helped me amass a fairly sizable uh, generational wealth legacy for my family and families to come. These principles that I'm going to help you understand today helped me find Microsoft in 1994, Apple in 1997, Amazon in 2001, gold in 2005, and many, 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 many others. And Bitcoin, obviously, in 2020. And these were some of my largest wealth generating plays over my career. And I've had hundreds of them. I hundreds of hundreds of traders have followed my wealth generating plays over the past decade. And what I'm going to do is share the foundational concept, the cornerstone concept that has throughout my career allowed me to identify these wealth generating opportunities. And so that's what I want to do with you today. Now, I encourage you to grab the beverage of your choice, grab something to write with. I want you to take notes. I may not have the ability to take many of your questions because we're sort of getting a late start here today, but this is what we're going to do. How to create generational wealth. All right. Now, for the benefit of those who are not familiar with me, I'm going to quickly go through my background. Guys, look, I'm the founder of a company called iFundTraders.com, which I started in 2007. But that is not the first financially oriented company that I formed in my career. My first company was called Pristine Capital Management. Many of you might even know it in the past as Pristine.com. I was the founder and creator of that company in 1994, one of the first short-term oriented and long-term oriented trading organizations in this space. All right. I have a 36-year career as a professional trader, 40 years of trading in total. I was selected by the industry to be the inaugural keynote speaker to the industry's first major international exposition, all the way back in 1999. I've trained thousands, tens of thousands of traders worldwide over the past 30 years, close to 30 years, a little bit less than 30 years. I'm the best-selling author of five international books on the topic of trading the markets for a living. These 5 books are written in 5 different languages. I have trained and currently train well over 5,000 plus equity, forex, and crypto currency traders throughout the world, and these traders span 96 different countries around the world. All right, I continue to be an international speaker on the circuit, and I'm also a consultant for a number of financial firms and exchanges throughout the world. All right, quickly. This is the article covering me being chosen as the keynote speaker to the trading industry's first ever international event all the way back in 1999. That's on the left. On the right-hand side is Barron's, right, naming me and my organization the #1 source to go to for education and training in anything regarding financial markets. All right, this was done all the way back in 1998. Okay. This is an image of just a variety of my books in all the different languages. All right. You can always search Oliver Velez books, and you'll basically get a list of all of my written books. And here are the social media outlets where I'm relatively active on a day-to-day basis. So Instagram, Facebook, Twitter, and of course, you're here listening to me and watching me on my YouTube channels. Now, guys, I spend a great deal of time every single day making sure that I give you something of value via my YouTube channels every single day. That's right. That's every day of the week, 7 days a week, 365 days a year. And so I strongly encourage that you subscribe to the channel if you haven't already done so. I want you to click the link in the upper right-hand corner. Click the bell in the upper right-hand corner. Make sure you turn notifications on so that you don't miss any live sessions I have here, nor do I want you to miss any of the daily content that I put out on the channel. Okay? I have a channel for all three languages, English, Spanish, and Portuguese. All right, guys. So let's get started. All right, relax. I want you to grab something to write with. All right, grab the beverage of your choice, and let's go. All right. Now, the tools that we're going to need are very basic, guys. We're going to need a candlestick chart in 2 time frames. We're going to need a daily time frame, and we're going to need a weekly time frame. And that's basically all we're going to use. Now, again, I want you to understand that I'm going to give you the foundational principle upon which all of my tactics and strategies are based on when it comes to finding generational wealth opportunities. And so this is not going to be a talk specifically about where precisely do you buy, where precisely do you sell. Generally, yes. But what's more important than that is the underlying principle behind proper opportunity spotting. All right. You can have the best entry methods, you can have the best exit methods, but if you're not identifying the right opportunities, then all of that's for naught. So the foundation of all proper play is being able to identify the right thing. And when it comes to generating wealth, the accuracy of your entry and exit is not as important as choosing the right horse. We need to find the right horse. We need to find the horse that is likely to become the fastest horse in the race. That is far more important than precision in entry and exit. In the day trading world, your precision with entry and exit is actually more important than your opportunity spotting skills. In the wealth game, it's actually reverse. It's more important for you to be able to pick the right thing, and you can be a little sloppy in terms of how you get into it and even how you get out of it, as long as you've chosen the right horse. Okay? And so we're going to use daily and weekly charts for this, for finding these opportunities. Now, the key thing that you're going to hear throughout my entire talk today is that the market has one cycle and one cycle only. Now, if you've covered my work for any period of time, if you've followed my work for any period of time, you're going to realize that this is something that you've heard me talk about over and over and over again. So even though it has been something maybe that some of you've heard me talk about, repetition has a value, all right? And perhaps there are going to be some nuances in this talk about the one cycle that you didn't catch before. So bear with me. What's important to understand is that the market doesn't have a variety of different cycles. The market doesn't have 4 cycles, 3 cycles, 2. It has one cycle that it repeats over and over and over again. And what's interesting about this cycle, traders, is that it's no different whether you're looking at a micro time frame like a 2-minute or a 5-minute chart, or whether you're looking at a macro time frame like a daily, a weekly, or a monthly, or even a yearly. No matter how close you zoom in or how far you zoom out, you're going to find this one cycle repeated over and over again. And so I've always called this one cycle like the atom of the market. It is the base layer of the entire market's existence. Okay? And this is what the one cycle looks like. It's a bell-shaped curve. It's what economists would call the boom to bust cycle. Okay? And there is nothing else the market can do. Now, when I talk about the market, traders, I am talking about every financial market in the world. Whether you trade or play or look for opportunities in the equity market, the bond market, the futures market, the cryptocurrency market, the options market, it doesn't matter. The Forex market, every market in the world only has one cycle, the boom to bust cycle. Okay? There is nothing else. And when you understand this base layer of the market's reality, things begin to fall very neatly into place. Okay? So this is the one thing I need you to understand, that the market is trapped on rails, that it can only do this. Look, over and over again. Repeat, repeat, repeat. Okay? One cycle. That's it. That's the first thing. Now, let's talk about the fact that this one cycle that repeats itself over and over and over again, no matter what time frame you look at the market, this one cycle. This one cycle is divided into 4 stages. It's important to now understand that there are 4 pieces that make up this one fluid cycle. Let's look at the 4 pieces. Each piece, or each stage, as you will, is almost corresponding to a mood that the market has. So while the market has one cycle, it does have different moods. It has 4 different moods, 4 different stages. Let's look at them. All right. Now, this is me dividing that one movement up into 4 pieces. On the lower left-hand side is piece number 1, or stage number 1. After stage number 1, you have stage number 2, and then 3, and then 4, and then we repeat the cycle again on the right-hand side. Now, it's important that we always identify a stock or whatever you're trading. You should always know, you should always identify the cycle, and you should always be able to determine where you are in the current cycle. Are you at the top of the cycle, which is number 3? Are you at the bottom of a cycle, which is number 1? Now, you can't be in number 1 if number 4 didn't happen before it. Now, listen, this becomes very important, traders. These pieces, these stages cannot occur out of order. Listen to me carefully. They cannot occur out of order. So you can't have a 1 and then a 3. You can't have a 3 and then a, a 1. Like they come in order. So a 2 follows a 1. A 3 follows a 2. A 1 follows a 4. So if you know what happened, what the last piece or the last stage of a cycle was, then you should know where you are right now. Okay? So if you've had a 4, which is on the decline side of the cycle, then you know that what happened before was 3, and what's going to happen next is 1. So the key, listen to me carefully, the key to having some measure of predictive skill, some measure of being able to determine what is likely next, and your ability to get that right with a relatively high level of frequency is going to depend on your ability to identify where you are in your items cycle, in your stock cycle. So if you're in stage 3, then guess what is likely to be next? Stage 4. If you're in stage 4, guess what's likely to be next? Stage 1. If you're in stage 1, guess what's likely to be next? Stage 2. If you're in stage 2 right now, what's next? Stage 3. And it is this base layer of knowledge that creates a market player's high level of predictive activity. Now, it's not 100%. Nothing is in life, but it's pretty close. Okay? So once again, To summarize, market has one cycle it repeats over and over again. This one cycle is divided into 4 stages. Knowing how to identify the cycle and where you are in the cycle is the key to being able to determine what is next. And if you can determine what is likely to be next, and you get that right more often than not, you will be wealthy. You will create generational wealth. The key to your ability to generate generational wealth is to be able to get what's next right. That's the key. What's next? If you can know that and get that right most of the time, then you'll become a wealth generating machine. What if you could determine that the next move in a specific play is down? Wouldn't you be able to prepare for that? Wouldn't you be able to milk? What if you could determine with a high degree of accuracy that the next move is a powerful up? It's not up yet, but the next one is. Wouldn't that be like a lottery ticket? Yes. And that's exactly what this is, if you get it right. It's a freaking lottery ticket. And I'm here to prove it to you today. So by the end of this presentation, you're going to walk away and you're going to say, wow, wow, wow. You're going to say it 3 times or more. I promise you. Now, let's go. Okay. Just like there are 4 stages that make up the cycle, there are actually 3 trends that make up the 4 stages. All right. To say this another way, there are only 3 movements the market makes. You know, traders and market players have this tendency to make this game a lot more difficult than it really needs to be, traders. This game is simple. I'm not saying it's easy, but it's simple. The mechanics are simple. There are only 3 movements the market can make, and we know what they are: up, down, and sideways. It's not like that's complex. It's not like that's very, very difficult. 3 movements. We just have to learn 3 movements, 3 trends. It's not like the engine of a Ferrari that has 2,000 different movements going on at the same time. Now, that's a complex entity. The market's a simple entity. The body has tens of billions of processes going off every single second. That's a complex entity. The market's a basic entity. Right? So hopefully you understand that as we progress in the presentation. So 3 trends, 1 cycle that's made up of 4 parts or 4 stages. Those 4 stages are really comprised of 3 movements or 3 trends. All right? And here they are: sideways, up, and down. Very simple. Now, in your sideways movement, your highs are relatively, the peaks are relatively even. They don't have to be exactly even. All right. The market's not a precise thing like that. So they can be a little off, but generally around the same area. And your bottoms are generally around the same area. And that's a sideways movement. Your up, obviously, your up moves or your uptrend has relatively higher highs and relatively lower lows. Your downtrend is just the opposite: relatively lower lows and relatively lower highs. Okay? And these are the 3 trends that make up the vast majority of the one cycle. Okay, so remember, let's summarize again. 1 cycle that's broken up into 4 stages. Those 4 stages are made up of these 3 trends. All right? Now, let's keep going. So, here we are with the 4 stages. You have On here's the one cycle broken up into the four stages, and we know that there are three trends that make up these four stages, and the trends overlaid on top. Stage number one is a sideways trend. Okay, relatively equal highs, relatively equal lows. Remember that. The highs are relatively even in stage one, and more importantly, the lows are relatively even. Not exactly, but relatively. Okay? So that's what's going on in stage one. Stage two, stage one. Stage two is your uptrend, where the highs and lows, the highs are relatively higher and higher, the lows are relatively higher and higher. Okay? So higher highs and higher lows. All right? Good. Of course, so we've got the sideways trend in 1, 3, and 1 again. We've got the uptrend on the left, which makes up stage 2. And of course, what's next is that we get stage 4, which is the downtrend, where you've got lower highs and relatively lower lows. And this makes up stage 4. So you see, traders, there is one cycle that repeats itself in the market. Now, we're going to look at many examples of this, so just bear with me. We're going to look at real life examples to show you this over and over and over again. I'm laying the educational, academic foundation first, okay? So we have one cycle, okay? One cycle that repeats itself. That cycle is divided into 4 stages. All right? Those 4 stages are made up of 3 trends. Sideways trend, sideways trend, sideways trend. Uptrend, downtrend. Boom. Now, if you look carefully, there are spaces in between each stage. And that's what I want to cover next with you. Okay? These are what I call transitional phases. It's how the market switches from one trend to the other, how it switches from one stage to the other. Now, there are 4 transitional spots in the cycle. These are spaces that link 1 and 2 together. So here I'm showing you transitional phase A. This is how you move from a 1. This is the area where you move from a stage 1 to a stage 2. All right. And then you have transitional phase B, which is the point in the cycle at which 2 starts transitioning to 3. And transitional phase C is where 3 starts morphing into 4. And then we start the repeat process again, or the end of the cycle, where 4 starts morphing itself into a brand new 1, and repeat, repeat, repeat. There is nothing else. Now, traders, listen to me. Here's what I want you to understand. To make sure you're looking at me here. It's important to understand, traders, that From here, what we've covered so far, all right, what we've covered so far is the foundation upon which all proper market play is derived. If you get what I'm going to share with you here today, if you really get this and you really understand this, it's going to exponentially increase the quality of all of your decisions, especially when it comes to the wealth generating ones. Finding the right spots in the cycle to deploy your capital is the key to generational wealth. You can have the best strategy in the world, but if you pick the wrong time and the wrong spot in the cycle, okay, your strategy means absolutely nothing. You can have the most accurate tactic in the world, but if you apply it in the wrong spot. So, as an example, if you're in a stage 4, but you are deploying a very powerful buy tactic, will it work? Now, listen, in your mind, you're looking at me now, but in your mind, I want you to tell me I want you to imagine the cycle. I want you to put the numbers where the parts of the cycle. There's 1, 2, 3, 4. 4 is the down part of the cycle. If you're in a stage 4 and you're deploying a very powerful buy tactic, will it work? You tell me. I'm going to sip some tea. I know, live streams are on a delay. So while I sip my tea, I'm going to wait for your responses. Just a few of you answer. All right. If you're in a stage 4, which is the down part of the cycle, and you're deploying a powerful, accurate buy strategy, will it work? No. So this is the basis for all proper market play, being able to identify the cycle, first of all, knowing that it's there, being able to identify where you are in the cycle, to then bring out the tools that match the cycle. That's right. Now, fantastic. Good. I love it. Okay. So cool. This is good. Nice. All right, guys. Oh, did the wrong thing here. Okay. Sorry about that. Now, let us move to tops and bottoms. All right, tops and bottoms. This is where it gets a little tiny bit complex, but we're gonna fix the complexity. My image of the cycle is a bit simplistic. All right, that's my image of the cycle. It's a bit simplistic. Now, why is it a bit simplistic? Because let's take the top of the cycle. The top of the cycle is not always the same. The 3 part of the cycle can happen in 3 ways. It can happen in a pointy way. Whoa. It can happen in a pointy way, which is the first example. So you can have a pointy 3. You can have a round 3. That's how I drew it here. And you can have a double or triple top 3. So this is a double top. This is a double top 3. And then let me draw a triple top 3 for you. So here's 2, here's 3, and here's 4. And boom, there's your 1 again. And over here, here's your 1 again. All right. So it's important to understand that you can top out one of 3 ways. So you can't get confused if the top is this, this, or this. So remember the 3 types of tops that occur. And I'm throwing the double and triple together. All right. So sometimes it's 2, sometimes it's 3. All right. Now, to make matters a tiny bit more complex, I'm not going to spend a lot of time on this, but the double top doesn't, remember I told you the tops can be a little off. So you can get something like that where this top is a little higher, but it's still a double top. You can also get this kind of double top where the second top is lower, you see, but that's still a double top. So remember, when we're talking about this sideways-like pattern, it's always relatively equal highs, relatively equal lows. So this is a relative double top here. All right. Not exactly perfectly equal, but relatively close. Okay. So remember that there are 3 ways the top of your cycle can top out. These are the 3 ways. We're going to look at examples of these as well. Now, let's look at the bottom. The bottom, the 3 ways a stock can bottom out at the bottom of the cycle is exactly the same ways that they can top out. There's the pointy bottom, there's the rounded bottom, and the double or triple bottom. So your stock is moving down, and it can, boom, explode right back to the upside, giving you the first one. Or we can have something like this. We can have the stock is moving down, and it has more of that rounded bottom, which is 2. The rounded bottom. All right. And a stock can give you 3 where it's moving down. Boom. And there's that double bottom. And that can be a triple one as well. So you have to be intimate with the 3 ways that the bottom and the top of the cycle can occur, and be prepared for either one of them to materialize. Now, it's impossible to know which one is going to happen. But here's what's interesting, guys. You don't ever have to know what is going to happen in advance. You understand? This is not necessary. And this is a mistake that I believe a lot of traders make. They assume that it's necessary to be able to know what is next. Now, not always. There are ways, one of the ways I'm teaching you now, where you can determine what is next relatively consistently. But in many cases, even not knowing what's next is not necessary. Even if you don't know what's next, it's not necessary. It is better. It is sufficient enough to know what is. Okay? And once we, instead of us focusing on trying to predict which kind of top the market is going to have, what kind of bottom the market's going to have, we simply have to wait for the bottom to happen. And then we know, okay, that's a V bottom. That's a double bottom. That's a rounded bottom. You don't have to really know that in advance. All right? What you should try to know in advance is what stage is likely next. And that's what we're talking about here. So if we're having a double top 3, stage 3, then now we know what's next is 4, and that's where wealth comes from. That's where wealth comes from. If I know the market is about to move into a 4, that's a lottery ticket. If I know Tesla's about to move into a stage 2, that's a lottery ticket. That's a winning lottery ticket. All right? That's where wealth comes from. But we don't have to know how a stock's going to bottom or top in advance. That's what we don't have to know. We just have to wait for the bottom or top. And then once the bottom or the top is in, we know what's next. Okay? All right, good. All right, guys. Beautiful. All right, let's move on. I know it's all academic right now, but it's very necessary for us to do it like this. Okay? And what am I doing here? Oh, I see. All right, here we go. Let's go. Okay. Now, this is where I test you, but since I can't really test you at the moment, I'm going to do it myself, but I want you to do it in your head. All right? So if I were to give you this test and give you this blank cycle, you should be able to fill all the spots in. You should be able to tell me this. Okay, this is stage 1, this is stage 2, and this is stage 3, 4, and 1. You should be able to tell me that stage 2 is my bull move to the upside. Stage 4 is my bear move to the downside. Stage 3 is my top, and stage 1s are my bottoms. Okay? Now, you should be able to tell me that stage 1s are typically sideways. And you should be able to tell me that these 1s can be one of three things. They can be like this, or like this. Okay? And of course, if you want to throw that 4th one in there, you can get the triple one. Double and triple. Now, you should be able to tell me that stage 3 is like that. But it can either be this, it can be this too. Or it can be this. Or it can be this, double, or triple. Okay? Beautiful. You should be able to tell me that 2 is my uptrend. That's where I want to deploy buy strategies. 4 is my downtrend. I do not want to deploy buy strategies. These are where I want to deploy sell strategies. All right? And this is what you should be able to show me. This is what you should be able to tell me. You should be able to say, here are my transitional phases between each stage. And boom. You should also be able to tell me that once I have identified a 3, I should prepare myself for a 4. Once I have identified a 1, I should prepare myself for a 2. And so traders, listen. The key to wealth, the key to generational wealth is identifying what? 1s and 3s. I'm going to repeat that. The key to generating generational wealth lies in your ability to find 1s and 3s. You see, the world focuses on 2s and 4s, and I understand that. It's not that we don't focus on 2s and 4s, but wealth is in the 1s and 3s. The 2s and 4s, right, pay for our preparation. They pay based on our preparation in the 1s and 3s. So what I want to do here today is make you an expert 1 and 3 identifier. And if I can get you to identify 1s and 3s in anything I throw up on the screen, then I know you've got the foundation in place. And that if you do the right thing based on that foundation, you can generate generational wealth. So remember, the secret is not as much in the 2s and 4s of the cycle as it is the 1s and 3s. You have to be an expert 1 identifier. You have to be an expert 3 identifier. And the 2s and 4s will take care of themselves. All right? Good. All right. Let's go on to the next thing. The market's legs. Yes, markets have legs. Markets have long legs and markets have short legs. All right? They have both types. Now, when your cycle is even, as is depicted here on this slide, leg 1 and leg 2 is relatively even. So you can imagine that it is your sideways trend where legs are even. You see? The legs are even. So, or the feet, if you will. Some of my traders refer to these as the feet. So left foot, right foot is even. All right? But I like to think of legs, and I'll show you why. Left leg, right leg. So look, left leg, right leg. And the legs are relatively even in length. Okay? Now, here's an uneven up leg. So here's the up leg is leg 1, and your down leg 2, is leg 2, and which one's longer? Your up leg is longer than your down leg. And this is where uptrends come from, where the left leg is longer than the right leg. So in an uptrend, you have left leg, right leg, left leg, right leg, left leg, right leg. And so your legs on the right, on the left, are longer than your legs on the right. Lopsided legs. That's what makes the uptrend. Now, this is going to come very important as we move forward. To be able to, the reading of your legs will help you determine transitional periods as well as 2s and 4s. So when you have this, you're likely going to blast off into a 2, or you're likely in a 2. So let me demonstrate this really, really fast for you. If you are doing this, you're in a sideways pattern. Now, remember, sideways are 1 of the cycle and 3 of the cycle. So this is 1, 1, 3, 2, and 4 of the cycle, right? Okay. So how do you know whether this is a 1 or a 3? Well, you know by what happened last. So was the last trend down? Well, if the last trend is a 4, then this is a 1. If the last trend is a 2, then this is a 3. So you always know which sideways pattern it is, 1 or 3, depending upon what's before it. All right, so we've got this here. Now, You see this leg here? Boom. Leg 1, leg 2, and they're uneven. Leg 2 is higher. Well, look at this. Boom. Leg 1, leg 2. Now, this was a 1. What do you think this is now? Now that we have a higher leg for the first time, you tell me. I'm going to sip some more tea. I'll give you a few seconds just to see some of your responses here. All right, let me know. Let me know. Let me know. Let me know. I love this. Love it. Talk to me. You see what I'm saying? Higher leg after a series of equal legs. Yes. All right. But are you okay? Some people are saying yes, up. Okay, that's right. John Coppola, great job. You're not exactly completely in a 2. All right, I'll accept 2, but you're not exactly in a 2. You're in a transition to 2. Understand this. You're in that, remember that little circle on my chart that's after a 1? That's transitional A. So you're in transitional A once you get the higher foot. But transitional A is not a full 2. You need one more higher foot. And now you're solidly in 2. I'm going to repeat that. That should be written down. So the first higher foot is transitional phase A. Okay? Once you get another higher foot, you can be freaking guaranteed I'm in a solid 2. Okay? So those are the rules. 1 higher foot, transitional A. 2 higher feet, boom, solid 2. Now, all buy strategies. Only buy strategies. Buying the dip. When you're in a 2, you can buy every single dip. Some people say, well, what about this one? No, that one too. Oliver, what about this dip? Are you in stage 2? Yeah, that one too. What about this one? Yeah, that one too. Every single freaking dip. As long as you're in stage 2. Every dip's buyable. Buy the freaking dip when you're in stage 2. But you've got to know when you're in stage 2. So do you have 2 higher feet? Yes? Buy the freaking dip. Buy the freaking dip. Buy the freaking dip. Buy the freaking dip. Dips are not to be afraid of. All right? All right. Let me get to the graphs again, guys. All right? Let's get to the graphs here. Do it. Boom. So here's what I want you to understand about this. You're sideways. Then boom, you've got this, but more importantly, the higher foot. You see the higher foot? The higher foot. That means you are in transitional phase A. I'll do this in a different color. You're in transitional phase A. I'm going to show you this on charts, guys. You're in transitional phase A. And once you get another higher foot, I should have done that different color. Boom. You are now in stage 2. This is transitional phase A. This is 1, transitional phase A, 1 higher foot, stage 2, 2 higher feet. All right, let me draw it again. So look, that is your 1. Here is transitional phase A. All right, this is 1. Here's transitional phase A. Second higher foot, stage 2. Boom. Guys, who breaks this down this precisely for you besides me? Go ahead, you can say it. We know it's only me. But this is crazy. To have these specific, precise definitions of the stages is extraordinarily important. This is where your precision is going to be. All right? To know what's a transitional phase and what's a full-blown 2. What's a full-blown 1 and what's a transitional phase 2-1. What's a full-blown 3 and a transitional phase 2-3. And so knowing all the parts of the cycle and being able to identify where you are in the cycle is crucial. So once again, boom, 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 boom. There you go. There you go. But here, higher foot, boom, boom, transition, boom, boom, second higher foot. Now you've started 2. Okay? And that's what happens. Now, once you have an equal, so when you're going up like this, and now you fail to have a higher high, and you come back equal foot, well, we know what an equal foot is. That's foot 1, foot 2, or equal leg 1, 2. That's even. And so now I must be in a 3. Okay. Now, all right. So let's move on. Here is the uneven leg down. So when you've begun some movement to the downside, the left leg is higher than the right leg, or the right leg is longer than the left leg. There are 2 ways to look at it. And so if you are doing this, remember I told you the key is to identify a 3 and a 1. And now if I know this is a 3, I'm looking for 4. But what's going to determine a 4? It's going to be, let me do this again a little neater. It's going to be this. Now look at this. Let's say, for instance, like that. So here I have foot 1, foot 2, even. But now, boom. Now that foot is lower. Now this part of the cycle, traders, look at this. That is this. See? Leg 1 is higher than leg 2. So here we have leg 1 is higher than leg 2. Now this is transitional phase C, right? And if we get one more, boom. Now we're in 4. So 1 lower foot is transition. 2 lower feet is full-blown 4. That's how we're going to play this. We're going to scour the market for 1s and 3s. And we're going to watch feet, traders. All right, do you understand this? We're going to watch feet. So that's the way we do this. Okay? We scour the market for All right. We scour the market for ones and threes. You can take the NASDAQ 100, the S&P 100, scour the market. Isolate what's in a one, which stocks are in a one, which means that they experienced a 4 first and now they're in a one. Which stocks are in a I'm doing terrible with my transitions here. Doing terrible, guys. Sorry about that. So which stocks are, did I do this right? Why is it not working? Which stocks are in a one? Why is this not working? There we go. All right. Let's say we were to take the S&P 500 and we cull out all the ones. So out of 100 stocks, maybe there's 8 ones. All right. And how do we know they're ones? Well, they're going sideways to a certain extent. We know the 3 types of sideways or the 3 types of bottoms. But what happened before the one was a 4, a downward move. So we isolate the ones. Then we isolate the 3s. All right. How do we know they're 3s? Because they were 2s before. Okay. And once we have this collection of 1s and 3s, now we're going to be watching their feet. We're going to have a foot fetish. Do you understand? And so in the 3s, we want to see the moment, boom, 1 foot drops lower. Now we know we're transitioning to 4. In the 1s, 1 foot registers higher. Now we're transitioning into the 2s. And it just becomes a feet fetish, a foot fetish watching period. All right? Tell me you understand this. Does this make sense? Foot fetish traders. That's what we are. DS says hut. That's very, very astute. DS. I like that. All right. All right, guys. Cool. So let's get back to the slides. Good. Cool. All right. Now, we're going to get to examples because I'm not going to leave you without us looking at the market. Got to do that. So hang in there. Okay. The market's buy point. This is the sweet spot. Okay. What did I do? Sweat spot? No, not the sweat spot. The sweet spot. Okay. The sweet spot. You know what I'm saying. All right. This is your buy spot right here. Boom. Your buy spot is transitional phase A. We want that transition. Remember what that transition is. That's a higher foot, right? Boom. Boom. That's that. Okay? All right. It's okay to start when you are in the 2, but I prefer for us to get in on the transitional phase A. That's the most ideal point to get in. So remember, you have already isolated your 1. You're just waiting for the transition to occur. Okay? You're waiting for the higher foot. Once you get the higher foot, you're in. So the higher foot, the higher foot is boom. Now you've got the higher high. That's not enough Things go like that all the time. So we can't just, I mean, sometimes, but it's better oftentimes to wait to see what the next drop does. And if it gives you the higher foot, this, oh, am I not showing? Am I not showing? Am I not showing the chart? Okay, let me do it again. All right, let me know. Let me know. Let's see. Do I got it now? We're good. All right. It'll be delayed. It'll be delayed. It'll be delayed. Okay. Sorry about that, guys. Game is off today a little bit, but we'll get through it. We'll get through it. So good. So guys, look. Here we are. Again, I'll cover this again. I know it's gonna be delayed, but let's see. You let me know. All right. Let me know. Let me see. Yeah. All right. We're good? All right, guys. Yeah, because there's about a minute delay or so, guys, on this. Maybe a little bit less, but okay. So here is the sweet spot. Here's the buy spot, guys. This is the buy spot. All right. Our buy spot is transitional phase A. Okay. Now remember what transitional phase A is. Transitional phase A is the higher foot. Boom. That higher foot is A right there. Boom. Which means that as soon as you can confirm a higher foot, you strike. Okay? This is your strike point right here. Right? Now, I'm not going to drill down into this today. That's not the topic today. This is a little bit more general, but if you get this general base layer together, your strategies of precisely when to enter and exit or whatever, they're going to be so incredibly on point. Okay? So the specifics of precisely which bar you buy and things like that, this is what I cover with my wealth traders. Okay? But today, I just want to be more general with you with the foundational principle behind all the tactics we deploy. Because I'm always getting, Oliver, why did you buy there? Right? Because these people don't understand what I'm teaching you here. So that now in the future, when you see me buy certain things, you'll say, I know what Oliver's up to. He's buying transitional phase A. And you'll understand some of my actions when you see them. Okay? So it's transitional phase A that is the sweet spot. That's where you want to get to. Now, it's okay to also, to get, once you're in a full-fledged 2, it's okay to buy in a 2 too. I'm just telling you where the ideal buy point is. The sweet spot is transitional phase A, that higher foot. Okay? All right. So that's the sweet spot. That's the best buy spot in your cycle. Now, once again, traders, how do we know this is a 1? Well, because a 4 happened before it. Okay? That's how we know it's a 1, which means that what's next? A 2. Now, some traders will say, Oliver, isn't it possible that a 1 can extend itself into an extended 4? Well, no. And I have an example to show you the difference between a 1 and a pause. So there are pauses and there are 1s. All right? 1s are wider, pauses are narrower. So do not get, and I will show you this, do not get the pauses confused with the ones. See the difference? Ones and pauses. Pauses will tend to eventually follow through what happened, follow through on what was happening before the pause. The ones are wider and they tend to be whippier, and that's what shakes out. That whippiness is what shakes out the last die hard holders on. And it is that shakeout. Boom, 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 boom. Now they've gotten rid of so many players. The stock can now advance into its transitional phase A, and then its full-fledged solid 2. So remember, pauses are narrow and thin. Ones are, and threes are wider. Okay? All right, good. All right, so now the sweet spot on the short side is here. Transitional phase C. Boom. And the way you tend to move into transitional phase C is you get a lower foot. Boom. Boom. Right there. Now that's where that is. And so once you get that lower foot, all right, boom, that's your entry. Now, again, I'm not going to go into specifics of the entry today because we drill down into the entry too so that everything is precise. And that's what I do with my well traders. But boom, now you're in a full, once you get another higher foot, boom, now you have qualified for a full-fledged 4, without a doubt. All right? Powerful. Simple, but extraordinarily powerful. And so, guys, there are millions of market players out there gambling. They've turned the markets that's supposed to be based on math and precision, they've turned it into a general casino because they don't know these foundational concepts. They don't know that there's one cycle. They think there's 100 cycles. All right? They don't know that there's just one. It looks different just because the tops, there are 3 different hats the cycle has, and there are 3 different pairs of shoes at the bottom the cycle has. But because of these 3 different tops and these 3 different bottoms or shoes, they think the cycle's different, but the cycle's the same. They don't know about transitions. They don't know how to define a transition and then how to define when it's a stock's in a full-fledged bull market. They don't know how to define the beginning of a bear market. The lower foot, here's the beginning of a bear market, is the lower foot, the first lower foot. Boom. That's the beginning of a bear market. All right? And then the second lower foot, you are in the bear market. This is the beginning. Now you are deeply in solid bear territory. They don't know, they don't have these specific defining criteria to govern their actions. So for them, it's a guessing game. But you will never guess again if you get this right. I'm not saying that if you get this right, you won't have losing plays. We all have losing plays. Like every professional poker player has losing hands on the way to the championship, but that doesn't mean that those losses are wrong. It just means that nothing's perfect. It's a game of probability where if you get 80% right, 8 out of 10, 7 out of 10 right, you're going to be wealthy. As long as you keep as long as you keep those ones that don't work controlled. That's a different topic, but it goes without being said. All right, so now, how to know where you are in the trend. And this is the last thing I'm going to cover before we look at the real market, okay? How to know where you are in the trend. This is very important because you can't know where you're going if you don't know where you are. So take a look at this. If this is the ideal buy area, transitional phase A, right? Then this must be, and this is 3, this must be sort of like the ideal sell area. Maybe we don't get the ideal every time, but that's the ideal sell, right? The transition, right before the transition to 3. So how are you going to know where you are? Because what if you think this is where you should sell? Because you think this is where the top of 2 is. Or what if you think this is where the top of 2 is? And then it just blasts forward. So in a 2, how are you going to know if you're in the beginning of a 2? Because selling there is wrong. At the end of 2, selling there is right. Or in the middle of 2, how are you going to determine that? So now we're going to talk about how to break down 2s and 3s to determine where you are in 2s and 3s. Now remember, traders, we talked about determining where you are in the overall cycle. That's not what we're talking about now. Now we're going to take these two parts of the cycle, the 2 and the 4, and we're now going to learn, how do I know if I'm in the beginning of 2, in the middle of 2, or more likely the end of 2? Because that's going to bring an incredible amount of accuracy to your market play. If I'm in a 4, how do I know if I'm in the beginning of 4, in the middle of 4, or I'm nearing the end and should be thinking about taking profits? Okay? That's what we're going to cover next. Okay? Now, I'm going to represent 2. This is your 2 move. See? So this blue represents the move of 2 from the low to the high. And it also represents the move from high to low on the downside. So here's your 2. And here's 4. Okay. Now, the way I want you to break up your 2s and 4s is I want you to think of them as divided into thirds. So a bottom third, a middle third, that's your second third on the way up, and a top third. Now we're talking about 2 now. So we're going to think of every uptrend as being divided by 3 parts, into 3 parts, equal parts. And this is going to become an important concept for knowing how to judge where you are in the 2. Is the 2 young? Is it an infant? Is it an adolescent? Or young adolescent to young adult? Is it a freaking old person? All right? Very mature. Okay? Now, the way you do this is with a question. You ask yourself, starting from this question. You start this question. Have I gone far enough? Have I gone far enough where it's obviously not the beginning? And if the answer is yes, then you got to do the next question. Okay? If I know it's not the beginning of 2, is the point I'm at the middle? And if the answer is obviously like, no, this can't be the middle means that I should double what's already happened. And if the answer is no to that, then you are in the top of 2. So let me give you an example of this. Okay? Let me give you an example. A stock has gone, boom, here's $20. Okay? And now we're at $50. Okay? Now, at 50, you're going to ask yourself, wait a minute, am I in the bottom third of stage 2 here? Obviously, the answer's no. And then you have to ask, well, am I likely, so is 50 likely to be the middle? So we're not in the bottom third. Is 50 likely to be in the middle? Well, you say, well, 20 to 50, that's 30. If I'm in the middle, this should go to 80. Right? You say, that's not freaking likely. Like there's some subjectivity here. I'm not saying it's impossible, but the likelihood of this being not tired yet, the likelihood of a 30-point move and a stock that originated its 2 around 20, the likelihood that it's only halfway done is very small. So you are closer. You're closer to being near the top than you are near the bottom and near the middle. So now knowing that not it's probability here, it's subjective to a certain extent, but knowing that you're likely in the top third means that you should start paring down your position. Move up a little bit more, take some. Move up a little bit more, take some more. And this is how I teach my wealth traders to ease out of their play. We ease out in 3. So let me tell you this. We enter in the transitional phase. This is the transitional phase. Okay, we enter. Now this is the full stage 2, the blue. All right. We continue to add in the 1. So the original entry is the transition here, the transitional phase. Remember what the transition is, right? So boom, that's the transition. That's here. Now, anything above here starts the blue that we're looking at. Okay? So now the blue begins. Okay? Now, so, see what I'm saying? Now, we want to continue to add in the 1. You can add in the 1. Build up your position in the 1, in the lower third. That area close to the transition. You nail the transition, but we want to add. We want to build the position up in the 1. And then we want to ride the 2. You do nothing in 2. You ride it out. Sit back. Relax. Let the wealth come. Once you have identified the fact that I can't be still in one, this is certainly not halfway, because halfway would mean I should double what's already happened. That's not likely. Then you have determined that you're in three, and now you should start paring your accumulated play down in parts. Now, I specifically teach my wealth traders how to do this, how to pare out of their positions, when and how, once we've identified that we are in the upper third of a move. And the same thing, guys, on the way down. So if I have identified a 3 and boom, nailed this transitional phase as my entry, my original entry, now the move down is the blue, right? 1/3, 1/3. I want to continue to find add moments. Boom, add, boom, add, boom, add, right? But now I want to stop adding in 2. I want to ride in 2. Once I've identified that I am likely to be in 3, we can't know for sure 100%, but we can be like 80% sure, 90% sure, whatever. Now I'm going to start pairing out, pair out, pair out, pair out, pair out, pair out. And if we get this right, what's next? Boom, boom, higher foot. And the game begins all over again. Over and over. Repeat, repeat for the rest of your life. Guys, I caught Microsoft here in 1994. I caught Apple here in 1997. I caught Amazon here in 2001. I caught gold in the form of GLD in early 2005. That was a tricky one because it was the beginning, but still. All right. And I began huge accumulation in Bitcoin on the transition in 2020. These were enormous wealth plays, and I still have all of them. Some decades. Now, what I will tell you is that every stock repeats the cycle. So every stock goes through that cycle, right? These are all cycles, cycle 1, cycle 2, cycle 3. So imagine my Apple play from 1997 having many, many cycles from 1997 till now. But I would play all of them right there, adding over the years to every transitional phase in Apple for decades. And once you get a power play like an Apple, an Amazon, a Microsoft, an Nvidia, a Bitcoin, you can play every cycle. And what I teach my traders, we take profits in the upper portion of the cycle when we identify properly. We take that upper third, but what we take, we don't take it all. What we take, we put back in on the next round. What we take, we put back in on the next transition. What we take, we put back in on the next transition. And we just parlay and parlay and parlay in. I can't even tell you how many plays in Apple from 1997. And here's the cool thing, guys. I teach my traders to always leave 20% in their winners. So it goes like this. You're buying here. You're selling. Here's 100%. You're selling 80. Right? 80%. Repeat. You're buying here. 100%. You're selling here. 80% of this buy. Now, and you're always leaving, you're accumulating over time with that 20%. You're taking the 80% to taste, to live, to enjoy, to realize. But there's a growing, when you have the right thing, there's a growing 20%. That 20% that you leave in there accumulates over time. And it is this that will over time give you generational wealth. This is how I've held on to a Microsoft, an Apple, an Amazon, and now a Bitcoin, and many others. My wealth traders, I started this wealth program, traders, in 2009. 2009. Do you know why? In 2009, because the market experienced a collapse. That was the 2008 collapse. 2008, late 2008, boom, 2009, right there. You now know what March of 2009 was. I knew where I was in the overall market after the 2007, 2008 collapse. That was your 4. But this was not a rounded bottom. It was a V bottom. And it is in March of 2009 that I launched the wealth program. How crazy is that? Do you think that was by mistake? No. I launched it with perfect timing. And I got 500 wealth traders to join me. And I will tell you, traders, that from 2009 to 2021, we freaking rocked. Do you understand? I can show you plays. Nvidia at $9 went to 600. I can show you plays like Facebook at 18. You know where Facebook went from 18? Microsoft from 24. You know where Microsoft went from $24? And hundreds and hundreds and hundreds more playing based on this cycle concept the whole 12-year period. Now, the question is, where are we now? And why am I pounding the table on wealth now? Well, you should now know. I time these things based on what we know in terms of where we are in the cycle. So anyway, let's take a look at some stocks now. And then I'll bring this to a close. But I laid the academic groundwork for you. I put the cornerstones in place. And when it comes to wealth, the cornerstones are more important than anything, because everything's going to be built on top of them. Your entry, your stop, your profit-taking strategy, all of that is built on top of the cornerstones, this cornerstone that we put into place. Without this, none of that matters. All right? So, the third approach, as you know, is this. Boom, boom. You got to break your 2s and 4s into 3s, into 3 parts. All right? The middle part is your ride part. You do nothing. It's only the bottom and the tops that we act. We relax in the middle. Okay. Now, real examples, finally. All right? Here is, these charts were grabbed as of today, this morning. Now, we're looking at a daily chart, looks like here. We're looking at a daily chart of crude oil. Now, can you see, sorry about that, guys. Can you see the cycle? I keep flipping like that. Can you see the cycles? Take a look. Now, you should be able to identify what kind of bottom that is. How do we know this is the bottom? Because the next move created a higher foot. Where's my transitional phase? Right there. See? Bottom, higher foot, boom! Okay, here we go again. Here's drop. Why am I drawing so terribly today? Drop, failure to make a new high. That's warning number 1. Boom! Transitional phase C. Okay, V bottom. How do we know this is the bottom and not just another low? Higher foot. Boom! I love that sound. I love that sound. If I had taught you this months ago and you were a crude oil player, you would freaking nail these points here. Boom. Boom. Because of the higher foot concept. 2, 3, 4, 1, 1, transition, repeat. All right. You get the point. I just get excited about these things. Pfizer, do you see the full cycles here? You know, look at this. What is that? That's your 1. V top. Look at the move up. Failure. Let me do this again. I gotta get this right. So look. Boom, drop, failure to make a new high. That's your sign. Boom, lower foot, transitional phase. All right, now this is small. You got to catch it. You get the point, guys. You get the point. You see this. 3, drop, failure, lower foot, transitional phase. Now, guys, you practice this and you watch this presentation over a few times, or better yet, you join me. I'm telling you, you're going to nail some of the freaking plays of your life. It's really not that difficult once you know the foundation, which I've taught you today. But I've taught it to you in a broad stroke. We need details. We need refinement. We need those entry-exit strategies, those stop protection strategies, those stop adjustment strategies, those profit-taking strategies. We have to build on top of this. But this is the most important part. It's that foundation to just know where you are in the cycle, to be able to know what is likely to be next. It's powerful. All right. Now, this, I put copper in there to show you that this is not a top. Remember, I was telling you, don't confuse pauses with a top. Tops tend to be a little whippier than that. That's more like a pause, unless we get proven otherwise with what? Boom, lower, boom. You see? It's not that, but what I'm expecting more likely is this. But so what if I'm wrong? What if we get the lower foot, then it's the lower foot. Even if I'm wrong with my expectation and that's going to break out to the upside, copper's going higher. If I'm wrong, I can still benefit. Lower foot, boom, short it. Makes no difference to me. So sometimes, right or wrong, you can still make money. That's why I was telling you, you don't have to know what's next sometimes. Just read what is. If I get a lower foot, then I know. But if I get a breakout, then I know. Both scenarios I'm prepared for. All right. Tesla. Now, guys, Tesla's is a wealth play of ours. You know, we did 130% in our last play with this. Now we're out. So we did 130% on this part of the cycle. All right. But take a look down. Well, let's do this a different color. So here, look. Down. Lower, higher foot. Right? You know the drill. This should be boring to you now. It's freaking boring now. It's time for us to end. It's freaking boring. Higher foot. Boom. Now, second higher foot, you're now in the throes of a powerful uptrend. All right. This is a little tricky here. This part here. You see that? And this is how we doubled. You see that higher foot right there? On that last play, we've been playing Tesla from the 40s, split adjusted. 40s, 50s. All right. All right, this is just showing you the example of a power trend. Now, guys, Hilton is a play of ours as well. We got into Hilton on the collapse into, right? So look, here's the collapse. Here's the pandemic collapse, right? And I knew that these collapses were way too far. Boom, there's your higher foot. And Hilton has just grinded its way. I mean, you know, we've more than doubled in the Hilton play. But if I get you on the team, on the wealth team, I've got to teach you that there are some uptrends that are not going, that you don't sell no matter how far they go. And this is one of them so far. And so there's no splitting this one in thirds yet, right? So remember I told you to split it in thirds, and you'd be like, shoot, man, this has gone so far. We got to be in 3, right? Not yet. There are certain uptrends you don't do this with. But those are things I'll teach you. That's why I'm saying there are certain refinements I need to teach you. All right. And then Alibaba. So we can see clearly an example of a pure downtrend. All right. So here you dropped, and this was your transitional phase there. And it's just been down since. So that's your stage 4 right there. Now, what I want you to do, we have come from 320 down to about 100. So this means that what percentage is that? I mean, that's freaking crazy, right? 70% decline. So when you take this and you divide this into 3, you got to ask yourself, well, I'm certainly not near the beginning of the move. And if I'm at the middle of the move, if we're at the middle, so the beginning of the move is out. Well, can I be in the middle right now at 100? No, this is not going to drop another 200 points. How can it? It's at 100. So think about this. This is a 200-point decline. You can't be in the middle at 100 because you don't have 200 points left. You would have to go past 100. So you must be in 3, which means that you are close to the end. And guys, that's how I picked off so many bottoms. I picked off the bottom in Bitcoin that way. I picked off the bottom in so many other things that way. Just with this third concept. You can't not be close to the bottom. You can't not be close to the end. If you're not in the beginning and you're not in the middle. So we've determined it's impossible to be in the middle. So you have to be closer to the end than the middle or the beginning, period. And so, again, all we have to do is wait for, if we've determined in Baba that we are toward the bottom or close to it, we have to wait for that. So now it's a waiting game. And then you'll know. Transitional phase A. But we don't have it yet. Look. We don't have it yet. We're here. So now it's a waiting game. All right. This is beautiful. You don't have it yet. Okay? You need the higher foot. All right. Good. So at least you can read now where you are in the cycle. Now, guys, this is another Occidental Petroleum is another one of our well plays. All right. Now, guys, we pulled a little something more advanced here. So Oxy is in a 4, right? Let me do that again. Oxy's in a 4. And it does this. There's the double one. The advance entry before the foot is on the double, because that right there didn't break this. Boom, 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 boom. See? Now look at the prices. $8 to $10 we got in. You can ask my well traders. We got in here. Look at Oxy in the 40s. $8 to $10 to 40s. That's wealth building move. That's generational wealth move. All right? All right. Remember, 80% out, 20% hold. All right. Here's Exxon. Now, we played Exxon for the dividend and the fact, because down here, Exxon's a big, giant dividend player. All right. And it's in a 4. Boom. Boom. There's the double. You remember the 3 types of bottoms? Pointy, round, double. That second foot is even. Send those missiles in. Boom, boom, boom. But you now understand this. You're now not going to be the bunch that DMs me on Twitter. Oliver, why did you buy there? You're going to know why I bought there. I see why, Oliver. The foot's equal or the foot's higher. I got it. Now, guys, take a look at Bitcoin. This is as of today. Bitcoin, look. You're looking at a daily chart. Now, you tell me what you think. All right? Stage 4 and stage what? What does it seem to be shaping up as? Right? You tell me. I gotta eliminate the screen for this and to see your comments here. What do you think? It's crazy, right? Now, let me go to this though. All right? Not a stage 2 yet. No, I see some people saying stage 2. Not a stage 2 yet. Not yet. Remember, the stage 2 is 2 higher feet. That's a solid 2. We've got 1 even foot. So this is the early part of a potential 1. So the 4 is over. The 1 has begun. Now, it could be the 2 foot, the double bottom 1, or it could be a triple bottom 1 or more, right? We don't know that. But let me tell you something, traders. Secret. I showed you Oxy and where we drilled it at that equal footing, right? I showed you Exxon where we drilled it at that equal footing, right? Okay. Now Bitcoin's at that equal footing. What do you think I'm doing? I'm drilling it. But if we get a freaking higher foot, oh my God. Oh my God. Oh my God. Oh my God. So now you know, you understand? I've given you the whole foundation of my decision making with these things. And that's huge. That it's guys, it has rewarded me for 30 plus years playing this. It's crazy, right? It's crazy, right? Okay. All right, let me get back to a few and then I'm gonna end it, okay? Get back to a few and then I'm gonna end it here, guys. All right. Let me pull back my slides here. And boom. Okay. So this is, if we're right, this is that potential one. So remember, boom, that's where I drilled Oxy. That's where I drilled Exxon. But in order for it to be confirmed, we need a higher foot. You see, we got this one, and this throws us over the top. The higher foot throws us over the top. So if we get something like that, I am telling you, this thing is going to the frickin' moon. All right. So we're going to see. All right. We're going to see. Beautiful. Glad you see these things. Here's for those who play Ethereum, another cryptocurrency. Look. Boom. Boom. Higher foot. It's likely to go. Likely to go big, big, big. All right. And Robinhood for boom, boom. Uh-oh. This is now big. So look, we have fallen from 45 to 9. What is that? That's 30. What is that? 30 points? You can't be, guys, if we break this in threes, you can't be in 1, you can't be in 2, and you certainly can't be in the middle of the downtrend here. Because there's not 30 points left. There's only 8 points left to the downside to 0. And now you're getting this for the first time in Robinhood's life. You're getting this. Now, if we get the higher low, you know. And so now you can, with great clarity, with this simple but powerful approach I taught you, knowing the cycle, how to break it down, how to label it, how to determine where you are in the cycle, how to determine where you are in the 2 and the 4, and how to read the foots and the legs. And wow, guys, the clarity is blinding when you get this stuff right. MicroStrategy. Higher foot, you're off to the frickin' races. And these things from higher feet typically double or more. You know, you've got to pick the right horse, though. You can't just do this on everything, to be honest with you. But HUT, somebody mentioned that earlier. HUT. If you get a higher foot or something, I mean, you already got a decent, this is decent, but this locks it in. The higher foot locks it in. You know? Again, Marathon, You know, this is very decent. The higher foot locks it in. And you can do both. Now, look, take a look at PayPal. Look at the bottom. Look at your top. Boing, 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 boom. There's your transition. There's your drop. Now, take this 4. Take this 4. All right. And tell me right here, where do you think we are? Are we in the beginning of the downward move, in the middle, or close to the end? What do you think? You know. This is powerful, traders. I think it's more powerful than many of you really, really realize. We're always trying to overcomplicate this game, and it's just wrong to do. I always tell traders, listen, if you can't explain your trading approach to a 12-year-old and have them thoroughly understand it inside of 10 minutes, your approach is too complicated. You're overcomplicating the game. Stocks go up, down, and sideways. So 12-year-olds understand that. They're playing video games that can move in 360. Your stock can't move in 360. It can move in 180, but not 360. Markets move in 3 directions. 12-year-olds understand that. There are only 3 moves. There's only 4 stages. There's only 1 cycle. Boom. Powerful. Powerful. All right. And guys, no need to go on with this, but you see these full cycles here. The bottom. There's your fail. There's your 1. There's your 2. Then there's your foot. But one must assume that you were closer to the bottom right now than you are to the top. That's all you need to know. Same thing with square or block. All right, good. So you know these things, man. You know these things. Label it out. There's your one, your 2, your 3, your transitional phase right there. Boom! Love that sound. Love it. All right. Powerful. And Apple's all of these things. Look at this one, guys. Look at this one. So we come down here. We have this kind of higher foot there. Look at this. You see that? You see that move back up there? You see that right there? And then this, boom. That is what we're looking at in reverse on a lot of things, right? Right there on the bottom, but that's the top version of it. Now, look at this. You don't even have to get the top, really. Drop, boom. You see that? Lower foot. Bang. So you know how to play even these mini cycles. So there are macro cycles and mini cycles. And again, guys, we looked at Bitcoin on the daily. We're going to look at more data. So you have this, right? You have this. You see that? there you are. If we get some type of higher foot up here, this is going to go. And it's nothing more than this over and over and over and over again. All right? That's it. Now, traders, once again, I want to thank you for hanging out with me. I also want to thank you for dealing with the initial technical issues. But there are some of you that I've spoken with today that I know that this concept, what I've talked to you about, what I've taught you, what we've shared, has deeply touched you. And it's these people that I'm interested in potentially having you join my wealth family. I told you that I started this wealth team in 2009 and we killed it. But we're in a very pivotal time right now in the markets that's going to kick off, in my opinion, the very next major generational wealth building phase. Now, I will tell you that I kept this club closed for a long time, like 10 years, because we were in the middle, and I like to start at the beginning. So the doors are open now again because it's another beginning time. It's a very, very unique time in the markets based on my cycle theory. All right. And I'm looking for people who this resonates with so we can do it together. Right. So my wealth program is one, guys, it's for life, meaning that we scour the earth for these opportunities forever. There is no expiration. There's no end. Once you're in the family, it's forever. And it's not just, this is not income, guys. We're playing for the big money here. We're playing for the big scores. And a lot of people know me more for my short-term oriented trading. But let me tell you this, traders. 95+% of all of my capital is doing this, wealth generating. I trade with a very small portion of my overall capital. So I am more of a wealth player from a capital perspective. I still trade every single day of my life, and I will always do that. I love it. And yes, it is the trading that provides the capital to actually play wealth in the first place. So they both go together. But 95% of my capital is deployed here, not in trading. And so this is very dear to me. All right. So what do you get with this program? Well, you get, there's an on-demand video that I put together that covers all of the tactics. You're going to learn all of the wealth strategies that are built on top of this concept. When to enter specifically, what the setups are, how to protect yourself, when to take profits, and how do you take profits? What percentage do you take profits under this scenario versus that scenario? All the details. We come together, all right? Sometimes more often than this, but we come together to scour the world, to review our plays, and to scour the world and the earth for other plays that are setting up in their 1s and 3s, to map out the strategy going forward on those plays. So forever we meet together. We have 3-4 hour sessions together, looking at the markets, finding these opportunities, defining where the entry areas are, where the transitional areas are. All right. And there's a private group right now. It's on Facebook. We might eventually find a different platform to do this on, but right now it's a private group for us to communicate day to day on together. There's one payment for this program, and then that's it. There's no monthly fee. There's nothing. You pay once, and that's it for the rest of your life. We're family in this wealth generating game forever. All right. So I will show you my plays, what I'm doing. Many traders just follow what I'm doing. Some people learn, all right, which I will constantly teach you why I'm doing what I'm doing, but you will know every single play that I'm doing before I do it. You'll know when I'm getting out of the play, when I'm getting in the play, when I'm taking partial profits, when I'm protecting myself here, what new things I'm looking for, where my entry points on those new things are once it happens. All of this, no blind spots. All right. And I'm going to pour 36 years of my trading experience and 30 years or so playing for wealth. I started trading and then I moved to wealth with the excess from my trading gains. I'm going to pour all of that knowledge into you. Well, we're together forever. Right? And you'll learn how I look at the world from a macro perspective, because when you're playing for wealth, it's the macro view that counts more than the micro. A lot of people get that mixed up. All right. Guys, the program is $5,000 retail. Now, when I started this program in 2009, it was $10,000. Now it's $5,000. But guess what? It's $2,000 if you act by the 5th of March. So listen to me. You can lose $2,000 on a single play. This is a wealth generating program forever. Guys, it's cheaper than a vacation. It's break this cost down over a lifetime, and it's not even pennies a day. It's sub pennies a day. One play can dwarf this. I'm proud to say we've had hundreds of traders who've just become independently wealthy from their wealth plays in this program from 2009. You know what the markets did. This is crazy. And I've never, ever in the history of this program, ever sold this program at this price. But I'm trying to make it as easy as possible for you to come on board, because the time now is so incredible. We're at one of those critical junctures in the cycle. And I want to help a bunch of people be my cheerleaders going forward. I try to time these things right, guys. You know, there's going to be a point where the program gets closed again because we're in the middle of the cycle, and that's not really a great time to be bringing people into the wealth when it's in the middle of a cycle. All right, but we're right at a critical juncture in the cycle. And I think that what's going to happen over the next year, year and a half, 2 years out is going to be life-changing. But we've got to start now. All right, we've got to start now. And so there you are. There you have it, guys. Now, I know those of you who've been following me for any period of time, I hope you realize that I put out a tremendous amount of free material every single day. And I do that because I've always wanted to leave behind a legacy, a body of work that helps people get into this space, that helps provide some degree of financial and trading literacy. Because these are the things I did not have in the early 1980s when I started. And I vowed to myself that if I were to ever, right, if I were to ever make it, I would make sure that I provided something of value to the space for people that were just like me, who had a great passion for this and wanted to do it right, but did not have the proper amount of information or the proper start. But I will tell you this: if you take this next step, you're going to catapult your market play, your level of market sophistication, the way you view the world from a macro perspective, your ability to find wealth in the world's financial markets will exponentially rise. And I will tell you that the players, the members of my wealth program are some of the brightest minds in this space because of their participation here. And so, guys, listen, I have I hope that I have delivered on my promise to give you something of value here. As I've told you, each time I grab a mic, I do my very best to try to deliver something that can touch you, something that can move you, something that makes you say, wow, and something that you can use for the rest of your life. I hope that I've done that here with you today. And if I haven't, I'm going to keep trying. I'll get better. I promise you. I'm not finished yet. All right, traders. Take this cycle play and rock the world. Know where you are in the cycle. Catch those ones and threes and zero in on those transitions and watch your wealth skyrocket. Join me, guys. Let's do this together. Let's walk into the next dynamic period together, hand in hand, step by step. And I promise you, I'm going to kill it. So let's kill it together. Boom. Love you. Love you guys. Woo! Look at that. Bitcoin Trading Club for life? $8,000 for life. Trade for Wealth and Bitcoin Trading Club, guys. Wow. My staff's always giving things away. They're crazy. Let's do this.